Hi, we are going to discuss about cash management. We know that cash is the part of working capital management. Cash is the most liquid asset in a firm. First of all, we understand that what is cash. There are two approaches in the case of a cash. One in the narrow sense and the second in the broad sense approach. The narrow sense, it includes currency and a generally accepted equivalent of cash, like a check, draft, etc. That is very near to cash. In broader sense approach, it includes near cash asset such as marketable securities and a time deposit in banks. So these type of things is also easily converted into cash within a 1 day or a 2 day, etc. So they can be readily sold and converted into cash. Can serve as a reserve pool of liquidity. Also provide a short-term investment outlet for excess cash. Then we think about what is cash management. The cash management concerned with the following things. Number one, cash flow into and out of the firm. That means inflow and outflow of cash. Second one, cash flows within the firms. Cash balances held by the firm at a point of time by financing deficit or investing surplus cash. So these are the things included in cash management. Number one, inflow and outflow of cash. Then the flow of cash in the business. Then cash balances held by the firm at a point of time. In the particular case, like a financing deficit or investing surplus cash. Four factors of cash management. There are four factors in the case of a cash management. Number one, cash planning. Number two, managing the cash flows, optimum cash level, investing surplus cash. There are four motives for holding cash. Number one, that is a transaction motive, precautionary motive, speculative motive, compensative motive. So these are the four motives for holding cash in the business. Then we are going to discuss one by one. Number one, what is transaction motive? Holding of cash to meet routine cash requirement to finance the transactions which a firm carries on the ordinary course of business. In the ordinary course of a business, there are a lot of expenses are there. To meet the expenses, we need cash. Cash is held to pay for goods and services. It is useful for conducting our everyday transaction or purchases. So these are the things relating to transaction motive. Then precautionary motives. The cash balance held in reserve for random and unforeseen fluctuations in cash flows. So we hold the cash in the business to meet the future contingencies. We are not to know what has happened in the future. So we kept some amount as a reserve for meeting the future contingencies. So that is known as precautionary motive. A cushion to meet unexpected contingencies, floods, strikes, and failure of important customers, unexpected slowdown in collection of accounts receivable, sharp increase in cost of raw material, cancellation of some order of goods. These are the important constraints in the business. So, to meet the future contingencies, we provide some percentage as a reserves. So that type of motive is known as precautionary motives. So it is in a defensive nature. Then the third one, speculative motive. It is motive for holding cash, near cash to quickly take advantage of opportunities, typically outside the normal course. That is a positive and aggressive approach. Help to take the advantages. An opportunity to purchase raw material in reduced price, make a purchase at a favorable price, delay purchase on anticipation of a decline in price, buying securities when interest rate is expected to decline. So that is some speculative nature. So to meet that type of speculative characteristics, nature, so that type of motive is known as what? That is speculative motive. Then compensating motive is a motive for holding cash or a near cash to compensate bank for providing certain services or loans. Clients are supposed to maintain a minimum balance of cash at the bank which they cannot use themselves. So every time the business organization maintain some amount of cash for compensating some expenses, for paying some expenses, that is a compensating motives. There are four motives are there. What are the four motives? That is, number one, transaction motive; number two, precautionary motive; number three, speculation motive; and compensating motive. Then what are the objectives of cash management? The first objective is that meeting payments schedule. That is, it prevents insolvency. Relationship with the bank is not as certain, helps in forecasting good relationship. Cash discount can be avoided. Strong credit rating, take advantages of business opportunities, can meet unanticipated cash expenditure with a minimum of strain. Then the second one, minimizing funds committed to cash balance. High level of cash flows, larger funds remain ideals. So low funds, if it is a low funds, that is failure to meet a balance schedule. So we need a minimum balancing or a balanced fund is needed to commit to cash balances. Then managing of cash collection and disbursement. Then we think about how to manage the cash collection and disbursement, accelerating cash collection, controlling the disbursement. That is cash management. Accelerate the cash collection, speed up the cash collection, but controlling the disbursement. Accelerating cash collection, that is decentralized collection. Number of collection centers are there. Collection centers will be collect a check from customers and deposit in their local bank account. They will deposit the fund into central bank. Then accelerating cash collections continue. The part is that the second one, that is lockbox system. In the case of a lockbox system, collection centers are established considering the customer location and volume of remittance. At each centers, the firm hire a post office box. Remittance are directly picked from the bank, whom the firm gives opportunity. Some disadvantages are also there. The advantages of a lockbox system: check are deposited immediately upon a receipt of remittance, eliminates the periods between the time check are received by the firm and the time they are deposited in the bank for collection. So these are the advantages of lockbox system. A separate box is there, post office box they hire, and used for the remittance of cash. So that is another method they are using. Then controlling the disbursement. It means delay the payment as much as possible. To delay the payment the as much as possible can help the firm in conserving a cash and reducing the financial requirements. So disbursement or a payment floats. Then the size of the minimum cash balance depends on how quickly and cheaply organization can raise cash when needed, how accurately managers can predict cash requirement, that is a cash budget. The cash budget is also helpful to predict the future cash and cash needs. How much precautionary cash the managers need for emergencies. These are the minimum cash balance depends these factors. Then the organization's maximum cash balance depends on that maximum cash depends on the availability of short-term investment opportunities. That is money market fund, commercial papers, certificate of deposits or CDs, etc. Expected return on investment opportunities. If expected return are high, organization should be quick to invest excess cash. Transaction cost of withdrawing cash and making an investment. Demand for cash for daily transactions. So these are the things relating to cash management. Thank you. Thank you very much.